Okay, good morning and welcome to the Minervini Private Access Training Room. I'm Bob Weissman. If you can just raise your hand and let me know that you're hearing me loud and clear. Hope everybody had a good weekend, enjoyed the football games, and let's also welcome Mark Ritchie into the room. Good morning, Mark.
Morning, Bob. Morning, Mark. Morning, everybody.
If you'll raise your hand one more time to let us know that you're hearing Mark loud and clear, that looks great. And then let's get started with today's session with Mark Minervini. Good morning, Mark.
Okay, good morning, everyone. Real quick, just want to show a contrast of sort of what we want to see and what we don't want to see. Taking a look at something like this. Hold on one second. Let me just get my screen right here. CRNX. You see how we're getting some leakage here and not staying tight on this pivot. And this morning I was talking to Mark and Brandon, and basically, the conclusion was is that there's a bunch of setups here, at least a decent list, but not a lot of tightness on the right side. So that's what we're looking for. Looking for that volatility to come down, and then from there, subsequently, breaking out of these consolidations, which there's a good number. One of them, of course, is Ollie's squatting here, but so far so good. I would like to see this build out a bit more, but again, some of these come out a little bit early, and as it starts to move, I'm going to buy if there's a decent viable pivot. So we'll see if this holds up here or if it needs to spend a bit more time consolidating here. If you haven't gotten in, if it does consolidate more, you may even get a better buy point at some point here. But at the risk of missing it, we did go in here and buy some both for platform open positions and Minervini Select portfolio. Getting a little bit more aggressive, adding some exposure to the Minervini Select portfolio. We've got a small gain. We've been down this road before where we've gotten a little bit of traction, only to see it reverse. We're hoping this time where it's more sustainable. Let's see. I think that's about it. I made things pretty clear in the weekend video. Hope that you guys watch that, and let's see what you're thinking and get to your questions.
All right, sounds good. First question from Gary. Will you only play pullback buys on breakouts of a VCP, for example, GVA, broke out of an IBD ascending base? If it pulls back to near the breakout, would it be playable in your system?
Oh, the if questions, if this were to pull back, I'd have to see what it would look like. Usually hypotheticals, I don't enjoy in giving an answer on a hypothetical, but this doesn't look like one that I would be buying on a pullback. It would definitely not be a pullback buy just because it pulled back here. Our definition of a pullback buy is a is a spot to buy within the base, coming out of the base or pulling back to the top of the base. So this isn't going to meet that criteria, I think, even if it does pull back here.
All right. Roberto is saying his adjusted win-loss ratio is 2.85 based on the last 3 months. And using the RBAF, it tells me my optimal F is 40%. My average position size is currently much smaller at 7%. So his question is, how much should I increase my position up to 40%? And at what time frame do you guys use to track your adjusted win-loss ratio? Is 3 months adequate?
Well, yeah, I mean, whatever time that you have, but you have to take a look and sort of, uh, look where the data is coming from. I mean, if you only have a few trades, and obviously it's not scientifically significant, or if you have maybe one big trade or one big win, and it's skewing it, so you have to, use use decent judgment as far as what type of data you're using, but the more the better. Also, if it's real old data, you may have where you're doing something better now, or so just look at the data that way. But as far as position sizing is concerned, there's an entire chapter in my book on Think and Trade Like a Champion. So and as we've said many times, we would go up to maybe 25%. As you can see in Minervini Select portfolio, we're using 25% position sizes as the max position size. Otherwise, we would be going overweight. So 40% would be huge. That would be a big position. I'm not saying that you can't do that, but certainly I wouldn't go over 50 in one position unless it's maybe intraday, throughout the day. If you want to go put your whole account in one stock, but holding overnight, that's taking a lot of risk. But the fact that, Optimal F is saying that you have 40% position sizing for optimal, it means that you're managing the risk reward relationship really well.
Yeah, excellent job. Good job, Roberto. Eric is asking, how do you change your tactics when you're stuck in a 5 to 6% drawdown? Do you adjust position sizing, take fewer names?
Yeah, that's a good question. Well, Mark, I'll let you, why don't you start, and then
Yeah, both, of course. And this is where, the bigger the drawdown, the more conservative I want to get. We talk about trading your smallest when you're trading your worst. So yeah, I want to, the goal, if you're in a hole, first rule is stop digging. Well, the best way to do that is to get your size to a point where you can get back in sync without losing, or digging a deeper hole. So you've got to, account for that. And then I want to look for tighter setups too, rather than opening up the game, you get, again, incrementally tighter as things are not working.
yeah, there's a couple of reasons why I don't like to get myself into a drawdown and get into a big, a big hole, and that is the obvious reason is because you're losing money, of course, and now you've got to dig your way out. But because my discipline, it's going to force me to trade a lot smaller because I don't want to get myself deeper and deeper and deeper. And if I am going to go deeper, I want it to be less and less and less. And it's also going to limit, my, or I should say, it's going to more focus me and is going to limit me. It's going to limit me to the type of trades that I'm going to take, as Mark just said, going to those tighter entries now. So I'm going to limit myself across the board as far as being more selective, tighter stops, smaller positions, and just work my way back, slowly, because the key is if you get down now, you go and have another run like you just did. Let's just say, it took you 6 or 7 trades, however many, to get into that situation. And now you do it again, and now you're down 10, 11, 12%. Now, it's getting more critical, right? And that's what we don't want to end up in. So you just got to be really, really cautious and careful. And, that's how you should always trade unless you've got traction, you've got some cushion, and things are really working. It's easy to look later on and say, well, I should have gotten aggressive. If I had gotten aggressive, it would have been the right time and so forth. And you can Monday morning quarterback, but that's okay. It's in hindsight. But at some point, if you're just, guessing and you're not using progressive exposure, not letting the market traction dictate what you do with your position sizing, eventually you'll be in the wrong place at the wrong time.
His follow-up is, what percentage of your capital do you allocate to trading breakouts? If the goal is to capture total returns and breakouts have not worked well, like the past 6 months, wouldn't it make more sense to treat the indices like that have been continuing higher, to treat the indices like a stock trade and just get exposure to the market using SPY QQQ?
I don't even really know what that means, to be honest with you, but I'm going to I'm not going to stop trading the breakouts because they're not working. Part of they don't work half the time. I would never be trading breakouts if I use that rationale. My entire career, breakouts have only worked about 45% of the time, probably less often than they do. So I'm not sure. I can't really relate to that question, to be honest with you. I'm not gonna just give exposure into the market as a surrogate or a supplement to trading breakouts.
There are lots of times that our strategy works well while the indices are doing nothing. So
then when I stop trading breakouts, then they start working. What happens then? Then I went through the bad time to get to the good time, but then I quit before the good time. You have to, in order to be there for the stocks that work, you have to go through the stocks that don't work. It's just you have to be there. You have to participate. So you don't. If we had a crystal ball and we can know that ahead of time, well, then I wouldn't have had the losses in the first place. I would have known when to go in and when to not trade breakouts in the first place. I wouldn't be in that position in the first place. There's no way around this. You're not going to have a crystal ball. Part of a strategy is when it doesn't work, and going through that period is part of it. That's why our batting average is only, 45, 50% over the long term.
Okay. Hytham is just asking if either you can share on the live stream when we do have a accumulation distribution day, which I think Mark does do pretty accurately or often with his morning notes. But maybe Mark, it's worth just sharing the definition of those two events to help him be able to track this for himself.
On accumulation day?
Right. Versus a distribution day.
Yeah, I mean, when there's significant accumulation days and distribution days, we usually highlight it not only in the morning in a morning brief in my notes, but also on the weekend video. So, accumulation day is just a day where you're up 1% or more on an increase in volume. And distribution days when you're down on an increase in volume, or there's churning, and maybe you were up big and then you closed on the low and volume was elevated. Again, I explain that generally, on a regular basis.
All right. Diedrich is asking, after entry of a new position, do you directly put a stop market order to let automatic execution of your stop loss, or do you manually put your stops in when triggered on your charting?
Yeah, I'm watching the market all day, and we have a team here, and we sort of watch each other's back here. I do it manually. Mark and Brandon, they execute manually. Plus, I'm generally trading size, which 5, 10,000 shares or more, sometimes 20, 30, 50,000 shares. So that's not something that I'm going to put in a market order. So I'm doing it. I'm executing manually, and so is Mark and Brandon.
Question: planned to buy AMSC this morning, but the stock jumped 3.5% in the first few seconds after it opened, and he did not want to chase it. Stock then squatted back to the buy point, a reversal of about 2.5%, and he thought that was excessive, so he did not buy it when it squatted back down. Do you have any rules around what is excessive squat that you won't buy?
Well, it's kind of relative to the chart. Mark, I'll let you chime in on that too if you want. With this here, this is one that's a cheat area, buying it off the lows here as it starts to round out. This is a great buy as far as the chart is looking, the VCP, this right side here. You do have what I call an angle warning, though, and that is where the 50-day is in a downtrend. So these are more tradable in the short term and usually need more time to digest. And the steeper that angle of the 50-day is, when it's going in the opposite direction of the breakout, and usually you get these on the low cheats, the cheats, the steeper that is, the less likely that it is that I will buy it or I will just trade out of it. And the more it goes up against that counter trend, if you will, the more likely it is it's going to pull back. So just a little bit of color there. But as far as this, the squat's concerned, I got to look at the chart. I really got to see the chart. I don't like to buy a big squat. If it runs up, it's up 6, 7, 8%, then comes all the way back down. It's by its low. I'm probably not going to buy it there. Smaller, maybe it starts to come out a bit, just gets through, and that would be where I would normally buy it anyway, and maybe pulls back orderly. It doesn't look that ominous. As it starts to turn back up, I may buy it then. But I would have to look at the chart. I don't really have a scientific answer for that. I don't know, Mark, do you have any better?
Yeah, and so
answer?
Yeah, two things I would add. First of all, just in terms of this overall setup, the other thing is that correction is big.
Yeah.
And so this particular setup, I do like. Look, if you're going to try and it's almost a 50% decline there.
Which is again is a characteristic of when you get these angle warnings. A lot of time that's why, because it came down so hard. When it comes back up the right side, it hasn't had enough time to digest all that, all that decline.
Right, still a 97 relative strength. So if I like the tactic, if you're going to try and catch this, and this is a good way to try and do it. But to the question though of how big is too big on the squat, 3.5%, that's pretty, and then pulling back 2.5%, that's pretty normal.
Yeah.
I would not call that a big squat. And then the other thing I would look at is, if I was going to try and get on board, let's say it came out right on the open and, you either missed it, then I would try and look to go as it turns back up intraday. Is that the spot then you can get back on board? And looking at this, that's probably, if I really wanted to own the name, that's where I would have looked to maybe engage.
Yeah, real quick too, just to follow up on that. Let's just say, you're probably looking at this coming through the 2230-ish area right here. So, let's say it runs up and like you said, it's up 3% or so. Let me measure that too. So from right about here. Okay, so now it's up.
No, this morning it
Yeah.
popped out and then it came in and now it's
Right.
up
That's why I want to
8%.
make sure we're explaining this properly, because now it's not, he's not saying that it came in from this level. It was actually much lower, which was, as Mark just alluded to, 3% or so. So that's only about right here. So that, that would have been fine. It comes out there, then it pulls back a little bit. The real key, and this is the real answer, is it how much above the pivot point is it? So I don't want to buy more than about 1%, maybe 2% above the pivot point. So if it squats back, and like I said, it's not coming down from where it was up 10%, now it's only up 2. And maybe it's up 3%, pulls in, and now if it's up 1%, it's probably only about 1% above the pivot or so. So it would be viable under that scenario. I think this particular situation, you were fine buying it, on that pullback, on that squatter on that during early day.
All right. George was asking KYMR if that was a breakout today. He bought a third position as it broke over Thursday's high.
Yeah, I was watching it this morning and was considering it. Just held off a little bit. Wanted to give it a little bit of time, see what type of pin action we got there. And so yeah, I mean technically it's just a reversal recovery. You broke out here on Thursday, and here's a perfect example of a little squat. Next day it goes inside, you get that increase in volume. Now Friday was an options expiration, I believe, and that could skew some volume. But this is what I talked about, where you get a potential tip-off day. So I said those words in the weekend video, and that's where within the pivot you'll see maybe a good close, volume will increase, but it stays inside. I'm not going to get too concerned about that volume in the pivot, that it's it's too high volume. Some people say, oh, you said the volume's got to come down, and there's this volume day. One volume day, decent close inside, that's fine. So now as you follow through from that breakout, we get a reversal recovery, right? Now here's an example where we're in that exact situation that we just talked about, where it comes out and now it pulls back here. I'd be inclined to to buy it right here. I mean, I'd be fine if you bought some right here, because at this point now, it already broke out. You're buying just a little bit lower. It's not really acting that bad. I'd look for it to have a good close. Hopefully, that would be what the optimal situation. But also, if it comes in much from here, wouldn't have to come in too much. Let's see, came down to go. That's about 5%. Yeah, so you'd engulf this little pivot area, this breakout area, and put an outside day, and that would definitely, we wouldn't want to see that. So we're getting closer to the danger point. It's a little bit volatile for me. It's not as tight as I'd like it. But a big base. You got a real big base here. I love the way it came shooting off the lows here, and then from there has consolidated in a nice little VCP fashion. I would like to see it, get a little bit tighter here and a little bit more orderly. So it's not perfect on the entry, but yeah, it's viable. We're considering it.
Okay. His second question on Eli Lilly. You mentioned over the weekend looking for it to tighten up would be viable. He did buy a third of Lilly on Friday with a stop just below the low of September 17th. Is that an okay buy or too aggressive?
I wouldn't say it's too aggressive. I would say it is aggressive, and that's if you want to get aggressive, depending on what's going on in your own trading. Things are going maybe really well, and you want to push, push the envelope a bit. That's fine. If you really want to own this name, that's a bottom fishing pivot. But you just look, you see, you're going right into supply. You don't have to be a genius to figure that out, right? You're buying right into this immediate supply right here, and it probably needs to be digested a little bit. And sure enough, you squat it. You came in here a little bit today, so I would much rather see this, tighten up a little bit here. This could stay tight and then come out from there. I want to get through this area right here, and again, you don't necessarily have to clear all the supply. When I say draw a line and look for. This is something that David Ryan used to say. One day we were at doing a master trader program in person, and we were going through all these things. Everybody kept asking all these questions about supply, and he he kind of got impatient. He was like, "Look, man, just draw a line." It's like it was so funny, and from ever since then, I've been saying, "Just draw a line, just draw a line." He said, "Just draw a line from the pivot back and take a look, and you can see, where the majority of that price action is." So when you get through a pivot point, you don't necessarily need to clear everything. You want to see where is the majority of the price action, and then you could go in there and you can more forensically look at it. You see reversal, it's sold off right here, right? Look, reversal, it sold off from there. Now you come back up to that level, reversal, it's reversal. You can clearly see that this 942-ish, 943 area and above is where you've got that supply. There's definitely sellers there. So now that's where we want to see it calm down, because when it calms way down, and the combination of tightness in price and volume contracting is an indication that supply has stopped coming to market. Those sellers have been potentially absorbed. Now, of course, we're going to see if it breaks out and if it can hold up and all that. If sellers come back, to the table, but you want to get through where the majority of that is. It would be nice to clear all the supply, to have it set up and tighten up right at the highs, and you get the breakout from a nice tight pivot, and it clears all the supply, gets it to new high ground. That's the nice thing about new highs, is that there is no supply. You've cleared the supply. So it's all a matter of just, chart analysis is all a matter of, trend and analyzing the trend, looking for where momentum's strong, and looking to get on board at these inflection points, or lines of least resistance, as Livermore called it. So I would say that, I'm just going back to your question. I know I'm going on a tangent here, but I would wait. I would wait a little bit, and that's what we're doing. We're watching it. We're waiting if it can stay tight. This is also somewhat of a late stage move here. It has made a big move, but because it's such a strong leader, I would still buy it if it's set up.
Alrighty. So Hill's asking if you can look at the setup of CPNG. He's a newbie to the platform, so I have a question about progressive exposure. That'll be a second question. But asking about CPNG, setting up and TBBB.
So CPNG is one that is on our list. I believe last week. We're looking for it to tighten up. It just came out here. I would have liked to see it tighten up a bit more, so it wasn't completely optimal for me. It's a little bit high on the volatility for me. But if you own it, I would stick with it. If I'm not going to chase it here. What was the other one?
TBBB.
TBBB. Yeah, food stock. And this is kind of all over the place, not really much of a base. You had a base here. If I were to be interested in this, I'd be wanting to buy it on 814. Maybe if you were super aggressive, you bought it as it turned up from this pullback back to the breakout. But other than that, I'd leave it alone now.
All right. And then this is a question on progressive exposure. I was in 100% cash over the last 2 weeks since I was on a vacation. Now I'm back. How should I increase my exposure? Should I wait to get traction in my first open positions, or lean onto my year-to-date profits?
Well, Mark Ritchie uses the words lean a lot on profits. Mark, I'll let you address that first.
Well, listen, vacation or not, you always want to use the same tactics.
Yeah.
So you always want to be increasing exposure no differently. And I wouldn't just if you've got nothing on, look, it's great to be up for the year. That's wonderful, but I wouldn't I still want to see recent traction rather than before throwing caution to the wind, if you will. So yeah, I would you run through the same process and start, from scratch, if you will, and then just bump yourself back up incrementally as you get some traction.
Yeah, you guys have heard me say a lot of times where look at your last, 4, 5, 6 trades. That's sort of like my immediate gauge of what's going on in my trading is to look at how my last, several trades have done. And if now again, in the beginning, when you're starting to add some positions, setups are coming, maybe you're coming in from cash, you may not have a lot of traction and you may ramp up a few positions. Maybe you buy 3, 4, 5 positions and you're adding positions even though you don't have a whole lot of traction yet. But now that you've added a number of this is well, swing traders coming up over here. Huh, okay. The now that you add some positions, you're getting to a point here where now maybe you're 50% invested. Then I would back off if they're not working. I wouldn't keep adding at that point. But as Mark said, those tactics aren't going to really change much. Whether I'm on vacation or whatever I'm doing, they're not going to change. And certainly, just because I'm up for the year, I'm not going to start investing or getting aggressive unless I'm getting traction right then and there, on the current trades.
Gabri's asking, they got stopped out on SDHC today as well as CRNX. Did I make a mistake buying them or was I unlucky entering the wrong names? SDHC and
Oh, yeah.
CRNX that you showed to start this morning.
Yeah, this is definitely discouraging. I was hoping this would hold up better. We took the safer route on this and de-risked. But yeah, this is well, what is the question?
Were they make a mistake buying them or unlucky entering the wrong names?
Did they make a mistake? Did they buy when we bought?
Well, that let's
I
go
don't
with
know
that
when you
assumption.
bought. So I mean, I don't think it would be a mistake to go in this if you were buying it either on 9/12 or on 9/17. Those were the two buy points that were correct buy points. And this is, yeah, this, if you want to call it unlucky, I call it part of the business of where some stocks work and some stocks don't.
Yeah, part of the plan. Not
Mhm.
everyone's gonna be a winner. Tobias is asking if you think TSM would be buyable above today's pivot, above the pivot today, I should say. This was on by Focus List last week.
Yeah, I have that. As a matter of fact, I'm looking to add this, probably add it to focus list here. Yeah, I mean, yes, technically, I would say yes, it is. It's more of a market stock. I'm not sure I want to chase it up here. It gapped a couple of days ago, but technically it is. I'd probably start buying it just above Friday's high on that use that maybe as a starting point, and then if it keeps going, add to it maybe a quarter or half of my position if we can get through this high here, the 919 high, and then add to that and build into the position. That's probably how I would play it. But yeah, technically, this is one that I'm looking to add to focus list momentarily.
Okay.
There's a handful of names that I didn't put on that I spoke about on the weekend video, but I'm just looking at them and seeing how they're trading here, and some that just need more work. Something like Goldman Sachs. This is, tightening up also. Similar type look where you're starting to tighten, you get another day here. So as I watch these intraday, I may be adding them if they're acting constructive.
Okay, great. GERD, actually long question. Let me get to another one. I'll read that more thoroughly. Ravi is asking what you think about SFM Sprouts.
Yeah, that's a grocery store that's come a long way. It's technically buyable, some 9/12 maybe, and also here on this little pullback buy. I'm staying away from it. You may get a blow off. I mean, it's been really strong. You can see it's made a big move. You can see, I believe we were talking about it back here. I know we had it on on focus at some point back here, but it's really made a big move, and it's accelerating here. So I think it's later stage.
And also TDS.
Mm. Yeah, this is one that, if I were interested in this, it'd be over here, on this pivot right here, going into some supply. So I probably wouldn't got too aggressive. Maybe on this pullback, and it puts this pullback back to the breakout, a little excessive on the pullback, but that would be the next spot. Here, I think I'd stay away from it at this point, unless maybe it built out this right side. It showed me a little bit better action, but this is a little bit too volatile for me.
And question of LRN was
Or
the
then,
19th a valid breakout, or was that too short of a base?
Now, it was kind of short, I mean, it's really not really a base. That's the problem. Here's a large enough sideways consolidation to where I would say you can call this a base, but the right side didn't really tighten up very much. It was kind of wild. Now you come in, you pull back here, and you pull back near the breakout to the 50-day, and that would have been maybe your next, opportunity. I don't generally buy to the 50-day and buy these pullbacks. I'm either buying them on the breakout, or I usually leave them alone. And now I wouldn't really call this much of a base. I would say this is more of a natural reaction, maybe even a cap type pattern, but I would like to see it tighten up a bit more, especially that I'm chasing it up a bit now, and it's not coming out of a large base. I don't want to put sloppiness on top of sloppiness, but it's acting really good. I mean, it's definitely acting well. It's on my on deck list.
All right. Abdul's asking if SWIM is a pullback potential.
Pullback buy potential, I guess.
Yeah.
Yeah. Yeah. Well, this is a potential power play. Of course, it's a $6 stock, and that's why you generally won't see the $5-6 stocks. Even though they may set up, I generally don't put them on. Except sometimes someone like yourself will maybe put it in the simple drop box, and you'll bring it to my attention. This looks, like a decent little power play. I just want to see how far it pulled back here. Yeah, only about 16-17%. Came out without much of a right side being built there. So I would look for this to maybe tighten up a little bit, maybe go inside, and then from there you could trade the pullback buy as it turns up.
Yeah.
But if it tightens up enough, I'll maybe put this on focus list, so you'll see when it meets the criteria that I think it should meet if I put it on.
Hyro is asking if Roblox is getting close to being on watch or focus RBLX.
Yeah, no, not really. I mean, it's a big sideways action here. You got a lot of supply. This is still, very laggardish. It's not meeting my criteria. No.
A follow-up from Gabri. Gabri was asking on that SDHC, why did you add it on open positions, but you didn't add it on the MSP, and it said sold into that strength? I think you had a pretty detailed post, Mark, when you did sell.
Yeah, I don't remember exactly what we did. Except I remember MSP, of course. I know we bought here, but we did not add to it. Correct? Is that right, Mark?
Yeah, that's right.
Right. But now, do we go in here?
Yeah, we went in there and it really just moved too fast. We would have ideally, liked to add it there in terms of the platform as well, but it really just came out really quick. It was already short term, sort of too extended
Right.
from
My
the
point
pivot.
is that we didn't get any on where we got it on the MSP.
Right.
Right. Yeah.
Yeah.
So that's why it was treated differently. I mean, if we had not bought it here, I couldn't remember why, but as Mark's saying, it moved fast. But if we had not bought it here, we would be buying it here. We would have been taking the position here, would be getting stopped out at a loss. Buying it off of the bottom fishing pivot allowed us to de-risk, into that breakout move there. Which, look, if you look at it, if it worked out, and this was just a natural pullback and it went higher, then, we would have given up some opportunity by de-risking. So it's, you have to, sometimes that works and you look back and you're going, oh, it's a good thing that we sold some there. And sometimes you sell it and it goes higher and you wish you held it. So that's a choice you have to make. But yeah, that's just why it did move quick and we just couldn't position it for everything. Sometimes, and there's sometimes where, the stocks move and I can't put them on at all, or I try to buy a stock myself and I can barely get any shares on, I need to buy, let's just say 5,000 shares and I can't buy 500 shares. The thing takes off and it gets away from me. So that sometimes happens.
Okay. Question on Netflix, if that would be a good add-on above Thursday's highs.
Yeah, I think if you have a small position in it, if maybe you took a quarter position now or a half a position, you want to ramp it up. I think if it breaks out to new highs, you could add to it. Yeah.
Arnie is saying he bought LDOS half position on September 19th as a creative pullback buy. Stop loss of 1%, added today to get a full position on now, and he pulled the stop loss to the low of Friday at 154.75.
Yeah, I don't think that's that creative. I think it's fine. I think it's just a normal pullback. Coming out of a pretty large base. I would look at this as all one base. I mean, it got wide here and it never set a right side. So then it pulled back and set sort of this, high handle, if you want to call it. I mean, it looks fine. I don't think there's anything wrong with that.
All right. If
We bought on the 13th, I believe, right? Right over here.
Right. Yep,
Yeah,
right there.
right here on the 13th. So I mean,
And today was a potential ad day.
yeah, I mean, I was actually looking at this after, it's gone up a couple of days and saying, maybe we should add it here. So you bought it on the day that we were considering adding.
All right. Kelly's mentioning on Market Surge, they have an indicator showing the daily volume as a percentage of the 50-day moving average and helps in his processing of volume. Is this something that would be added to our charting platform?
Yeah, probably. I think we do have Monalert does look for increases in volume. So you'll get an indication of that where it'll say it was up. I believe it'll say it's up. I don't know. I can't remember all the indicators off the top of my head. But I think some say, it's up on volume. The specific amount, to have that on every day. We could probably put that in our our new toolbar. We're working on a new toolbar that will be at the top and it'll show a lot of our ratings and stuff. Maybe we can add that up there. That's a pretty easy addition.
All right. DBD, is that buyable at around $45 a share?
Well, it's wedging up a little bit. You had a big sell off here. I'd like to see it tighten up a bit more. It's sort of wedging up this right side. So it's not making my cut at this point, but it is on my watch list.
Okay. Nicholas is asking if CYBR Cyber was on Friday a valid cheat area.
Let's see. So we got a lot of notes here. I guess there was somebody was maybe asking about it here, and it looks like I said it had an accelerated rate of advance off of small base. I would, probably stay away from it and look for it to tighten up. As a trade, since then it came off. It's consolidated. It's still kind of a bucking bronco a bit on this right side. Myopically looking at just right here, yes, this is a little cheat area right here. Not sure I would, it's one that I would play the stock, but if I were looking to get on this stock, that's exactly where I'd be buying it. Right where you bought it on the 20th.
Okay. Question on Ollie. Today's new entry price is currently back under the previous 4 and 5 day supply zones. Are you keeping it overnight, or when do you decide to choke off the trade on the entry day?
I don't know what that means. Supply zone. What does that mean?
I think he means those 2 previous pivots. over the last 2 or 3 weeks, Diedrich.
I don't know. I don't know, exactly what that analysis is, but we're planning on holding this overnight, yes. Unless it hits our stop, which is
Uh,
stop is very tight.
Daniel's asking, when you do de-risk a position by selling half, for example, do you then take the position into account as risk-free with regard to your progressive exposure, and do you still calculate the risk of the remaining, or do you still calculate the risk in your remaining position for deciding when to increase your exposure to new positions or the market?
I think I understand what you're talking about. Mark, do you understand what that means?
Yeah, I think he was referring to is meaning, okay, if you de-risk something, are you taking that, you know, not almost like not counting that in terms of like risk that you're carrying anymore? And I would say, well, listen, nothing is fully de-risked until it's sold. So I'm still running, based upon, yes, that individual trade. While it's not going to take any principal risk, there will still be, risk in terms of, open trade equity. So I have that number in my head in terms of, where am I at relative to the account, and, how much that position is going to impact it.
Yeah, that would be precisely my answer. I mean, you have open equity, and as you start building up positions, obviously, you've got drawdown. So, because you've de-risked, it's still, you could be de-risking a stock that's up 30%. Now it comes all the way back down to get to that stop that you've now financed, but that's still going to draw down from there. So, I would not look at that as, there's no risk. We've de-risked that particular trade, from a principal loss, yes, but there's still drawdown from peak.
Okay. Ed is asking on NRG. He did not buy it as he was planning for it to tighten up, but was September 19th a pause pivot with a stop using the low of September 19th?
I don't think I would use the low of September 19th, but if you want to be very, short-term oriented on the loss side, certainly if it, were to break out on the 20th, and then you engulfed, and you want to use an outside day as a stop, that's fine. I mean, that would be very, very tight. But that's sort of what, I would do in maybe an ollie situation. We have a tight stop here. Using this low here would just be looking, and again, this may change, depending on what happens today. But right now, if this were to come and close, or intraday, take out today's low and then take out the low in this pivot, that would be a big outside day. I would just get out. But however, maybe if this pulls back orderly and the market starts coming in, I may let it undercut that low a bit and change my stop and give it a little bit more room, depending. But right now, that would be a similar type situation.
Okay. A new member is saying, thank you for making trading boring. I need to find another expensive hobby now.
Try race car driving.
Yeah. Let me read his question. It's fairly lengthy. Let me move on and come back to it. Giancarlo is asking, PRMW, he bought on September 12th on a pullback.
PRNW. That's it. PRNW. So it's in
Mary W. MW.
Oh, I'm sorry. PRMW.
Bought it on September 12th on a
Yeah,
pullback.
Yeah, Primo water. Yeah. I mean, you had a nice look. You see how it exploded from here? Look at that tightness in price.
This was that proposed merger, Mark, again.
Yeah. So we would normally stay away from that, but just looking at it technically, this is really, a really nice tight VCP. And there's you could look at this as a big decline over here, but you're a good distance away from it. And then this would just be for a trade anyway. Maybe you'd sell it if it was up that much and de-risk it. But yeah, it's a proposed merger. I'm going to stay away from it. What is the question though? Are we backdating it on a purchase?
So on September 12th, he did buy it on the pullback, sold half of the position at $24 on the 17th. My question is, where would you recommend placing the new stop loss for the remaining shares?
I don't know. It's not my trade. I mean, that's up to you. I mean, you went in here, you had a stop loss, you've now de-risked it, and you have no risk. So that's your determination of how much you want to protect. It's not my trade. I have no idea. I would formulate a plan going into it, and depending on what type of profits I don't know what your average gain normally is, or I know nothing about your trading, so I don't know what's a big gain for you, a small gain. If you're a short-term trader or long-term investor, I would need much more information. For me, if I were to, buy this pullback buy and I de-risked it, I mean, if I wanted to hold it, then I would give it the full stop. But if I were just looking to nail some profits down and chip up my account, I probably would sold the whole thing already. So it really depends on what my goal is going into the trade. The real question is, what's your goal? What would you do? And does it make mathematical sense?
Going back to the previous question, he's citing a book called The Life Cycle Trade by Eric Kroll, who just defines the market is in different categories of life-changing bull market versus mini bull market, making some money versus small gains or losses.
Book Life Cycle Trade was by Eva. Eva, was it? Or maybe that wasn't her.
It was the same book, Mark. I think he was a contributor, though.
A co-author, it looks like
Yeah.
he wrote. And then
I know Eva, and Eva's a really great person.
And then a percentage of the market's a whipsaw environment. And the question being asked to you is if you can share what market environment we're in currently now of those four categories: life-changing bull, mini
I don't know
bull.
those four categories. I can't comment on those four categories because I have the book. I've thumbed through it, but I've never really read it. So I don't know those four categories. And if you tell them to me, they're not going to mean anything. I have books that I've written. So I think it would be, why apply my strategy to someone else's book when I have books? You should be asking what stage they're in under my rules. And I have well-documented rules that are in my books. So are we talking about the general market?
Yeah.
The general, and I make that clear every weekend. We do a whole, I do a whole video on the market and make it clear to where I think we are. And I think I made it very clear this weekend that the uptrend is still intact and we're in a stage 2 uptrend. And and I have a template for that. So all you have to do is apply the template, and it's going to tell you whether you're in a stage 2 uptrend or not. See, I look at things a little bit differently as far as I try to remove as much noise as possible, and I just try to apply as much logic as possible to the equation, and that is, what do I care? What stage I'm in, whether it's 1, 4, or 3, if I'm only interested in buying stocks that are in stage 2. So I just want to get good at identifying stage 2. Any other stage, if it doesn't meet stage 2, well, then it doesn't really matter to me because I'm not buying the stock. So all I have to know is what parameters it needs to meet to be in stage 2. Everything else I avoid unless I'm shorting, and then it would be looking at stage 3 morphing into stage 4. But shorting is not something that I've made any real money on in my entire career. So doesn't interest me much either. So I'm just interested if it's in a stage 2. I don't know what those stages are that they're talking about.
Okay. I think the other important part, Mark, just to share there is not to get fixed into an ideology that can't change from week to week or even day to day. And that's what Mark's weekend study sessions gives you real-time assessment every week. So
yeah, true.
I'll just add to the question. I think the most important comment is the idea of making trading boring. That successful trading, that's what it feels like. If you're trading for action or excitement, you're in the wrong business.
Well, at least the way we do it. There at times there's action and it's exciting. There are times where we're real aggressive and things are working great. And usually when it gets that exciting, it's time to sell. Take your profits.
Yeah. Okay. Question for the stop loss on NMM. Trades taken are 9.5% and 11.6%, which seems out of place with tight risk management principles on the platform.
Those are just maximum stops, and we're going to be updating that very soon anyway. Now they're having a good day today. We're up about 10%, over 10% on the first piece, and on the second half, up almost 8% now. So we'll definitely be updating those, but those are just, maximum levels. We're watching these stocks, all day long. So we're certainly not going to let this stock go from up 10% all the way back down to down, 9 or 10%. We would certainly be selling it before that. And again, if we de-risked it, then maybe we'd give it a full stop like that from a level that might be, where we're up at a decent profit. So that will be updated though. It's just I'm on with you guys right now, and I was already looking to update that stop.
Yeah, his question essentially was asking what allowed you to get into the name initially with that 9.5% risk, which is more than you normally take.
I just thought, I thought it was a good base. I don't recall what are we
12th.
but we took two positions. So
Yep, both on the 12th. So the first one, 9.45 and then 11.64.
yeah. Yeah, I guess, I can't remember what we're thinking at that time, to be honest with you. Sometimes I just put a maximum stop, and in my mind, I'm watching it, and I know that, if it doesn't do what it's supposed to do, I'm probably getting out maybe before that. This is one that maybe I should have updated quicker, but it's just, a tourniquet, that's the maximum level. You'll very seldom, I mean, if you're going to look at the stops, you look at all the stops, that we've stopped out on, you average them. We average between 3.5 to maybe 6%, depending on the environment, but over a long term, about 4 or 5%. So it's any stop above even 8% is on the high side, and anything over that is an aberration. But I think your real question is why? Why a bigger stop on this? Just be, simply because that's what the technicals, required at the time. Using the technical stop as opposed to a mathematical stop.
Okay, then he is asking about NVIDIA. Prior down leg between August 22nd and September 6th had lots of bad closes on above average volume. September 20th also had above average red volume. Understandably so, the stock does have resistance when a line is drawn on the left. The stock seems to be forming a cheat around the September 12th high with about 6.3% risk. Question: assuming the traction of the past few trades is good, will the above mentioned down volume days cause you to penalize the quality of this setup?
The down volume days that you're pointing out to, no, that's not really why I would penalize it. I'd be penalizing it because you have a lot of supply to the left. You've got a little angle warning there, as I pointed out. You can see right here. We already talked about this. I discussed it in the weekend video. But it's staying pretty tight here. As I pointed out, this is a key leader. So, if it broke out of this pivot here, I'd probably give it the benefit of the doubt and take at least, some position. But, having that supply to the left, it's very likely that, if it did break out, it was going to still need some time. You'll probably see something like this where it runs up to these old highs, maybe not in one day. I'm fast forwarding a bit here. And then you would have some more consolidation as it consolidated, this supply right here. And then we'd reestablish and see at that point, if it broke out from there, take out most of that supply, and that would be optimal. It may not, though. It may just come straight out and take off. Sometimes later stage, you get these blow off moves, and stocks that are really hot tend to just take off. This doesn't look like that, but anything could happen. But I'm not, going in here and looking at these individual days. I'm not sure what you're getting out of that. I don't see much to conclude from looking at those single day price action with volume.
Question on AXON, not a power play and is having a short base. What was the rationale behind trading the non-power play stock with shorter base?
Just a post earnings play, really, really strong, move here. Sometimes I know more about a stock and more about a company and more about the fundamentals, or the fundamentals are stronger. There's some element, in there that compels me a bit more. Usually if I'm, doing a post earnings play or some type of, stretch, if you will, I'm usually doing it from a lower risk standpoint. But it's just a, post earnings play on a stock that's acting really strong and has good momentum.
Yeah, I'll just add two, Mark. This was one of the first names to hit new high ground. Obviously, it was on earnings if you look at this compared to the general market. So it was sort of signaling, that this is really a strong name. As the market's coming off the lows, this stock just exploded into new highs and barely pulled back.
Yeah, there's another thing that, again, my karate teacher used to tell me, I taught you everything you know, but not everything I know. I try to teach everything I know, but I just, when you have 41 years of experience, it's impossible for me to teach everything I know because a lot of it is about feel and having a ticker sense. But there's times where I get into a trade, not necessarily because, or I should say, the reason is because it's so clear as to what it would look like if it was acting wrong. It was acting bad. Like this is a trade that, it needs to go right away. If indeed, this big move on the earnings is truly what it appears, this pullback with the market, I mean, this stock should just go. And if it doesn't, I know there's something wrong, and I'm out very quickly. So a lot of it is about trading near danger points and trading near inflection points that I know what to expect, where I've seen sort of this scenario before, and I know, okay, this is what it should do under this condition. It's very clear what it should and should not do. And that goes back to what I learned from O'Neill many, many years, many decades ago, where, he said, you don't need to know what a stock's going to do. You just need to know what it has done and what is normal and abnormal price action, and then adjust. So that's that other sort of, intangible, that doing this for a long time, you start to have a sense of, or at least I know, when the train is supposed to be coming in. I'm always the real key with trading, I think that I try to constantly pound home is that you want to trade under a set of circumstances that what is supposed to happen. And because when again, it's that reference point. If you know the train's supposed to come in at 6:05, if it's not there at 6:30, 6:45, 7:10, the further away it gets from that reference point, the more you know the train's probably broken. Something's seriously wrong, that it's not pulling into the station on time. But if you don't have that reference point, then it doesn't mean anything. Nothing means anything because you don't know what's normal or abnormal. There's some situations that I know this is exactly how this thing's supposed to act under these conditions. And then we get into these other trades where, you guys will pull something up and I'll go, look, this is a no man's land. I don't know what the heck this thing's going to do because it's just not a set of circumstances that I've seen and that are reliable and that it's from a set of parameters that I've got history, I've got precedence. So that's a big part of it. A lot of times, if you see me do something that maybe is a little bit off the beaten path, that's the rationale.
Which
That makes sense.
if I can say golden nugget enough times there, that is a key one to understand.
And it's a golden nugget, but it's one that I think that's going to take time as a trader that to develop to get to where you not only fully understand that, but are able to bring that into your trading and really utilize it sort of as a tool or a tactic. Yeah, I'm learning the same thing with my race car driving, which I use coaches and some really really top level race car drivers that I've been fortunate to learn from, and just the input of the steering wheel when they go around a corner, and as you see all these little, if you ever watch a race car drive, you see they're jerking the wheel all over the place. What are they doing? And they're releasing. As you're going around a turn, they're feeling the grip. You're feeling the grip on the road, and when you start to lose grip, you open the wheel up a bit, because if you keep the wheel turning, that's a typical force, you're going to lose the car, the back end. So it's racing right on the edge. A great race car driver is pushing the car right to its limit, where if he pushes it just a little bit more, the car breaks and it spins off the track. So as an amateur, I'm not going to push it as hard on that limit. Maybe I will occasionally, but a pro driver is going to be right on that limit. And that's that feel. That's that feel that allows them to those little subtleties to make those adjustments. And at the end of the lap, have a much better lap time than me. It's those little things. Same thing with my shooting sport. It's all these. So that's why I'm so fascinated with a lot of these sports and these competitive endeavors, because to master them, there's all these subtleties, just like trading. And over as the years go on, you'll understand the language that I'm talking, and you'll experience it yourself, and you'll get to that level.
Or JANX, JANX, which we highlighted, broke out on Friday out of the cheat. The stock's now trading below that pivot price. Is it buyable now as it's trading back below where that pivot was from Friday?
Well, this is another one that I'm, looking at adding back or adding to focus. That's not on yet, but I'm looking to add it very soon here. Well, probably, when we get off this call. So
Okay.
yeah, it's acting pretty good. Now I'd like to see this build out even more. I would love to see it come back a bit, shake out the lows. It's not perfect, but it's definitely, worth considering.
John is asking if you can review the Costco trade and the Ollie trade entry.
It's just very classic. I mean, Costco is just a pullback buy. Um, this is one that I think if the market goes, it's going to go with it. You're just getting some leverage maybe on the indexes, but this is just a classic pullback buy. Um, let's see here. And what was the other? Ollie's, right? Yeah. Oh,
Yeah.
I. And this is just a, classic, classic cheat area. Now, starting it from a pullback buy, and then it got through the pivot. I considered adding to it. If this right side was built out a bit more and it had a bit more symmetry, it looks a little compressed up the right side. So there's a chance that it comes in, it shakes out this low, and it takes a bit more time to build. But it may just go. So I want to have some position on. But let's just say this was built out even more, and I started buying it to the pullback buy. I would have probably and a half a position, I would probably added to it when it got above these highs right here and actually made the turn, and then I would have went full. And that would also been the case, if say, I was getting some real good traction, which we're actually getting some pretty good traction now. If you take a look at the open positions, we got a lot of profits. Some ONs up almost 19%, 8%, 7%, 9%, 10, 7, 8. Yeah, we're definitely getting some traction here. I don't know, Mark. Do you feel like, I mean, even though sometimes the numbers don't tell the whole picture as far as we'll have traction in as far as performance, but we don't move up to say easy dollar. Do you feel like this is an easy dollar environment?
I feel like we may be transitioning, right? You were just alluding to it. And depending on, how things are going, I think some folks may be experiencing that, and some folks are, still jockeying for position, would be my guess if you're doing it properly.
Yeah.
And I would say, we're kind of on the heels of looking to if we could get some more crispness, then I'm going to look to stomp on the gas a little bit.
Yeah, and I think, with the STEM model, it needs to be more obvious. Like, so for instance, in your own trading, you may already be an easy dollar environment for your own trading, which simply means that, you're getting the traction, the ideas are what you need to see are there. And it is an easy dollar environment for you. I doubt you're going to be in an easy dollar environment when we're on red and saying it's hard penny, but whether it's orange, and we're like, okay, you can take trades here, but take them cautiously, or you can go all out here. There's definitely a fine line there. So again, I just pointing out that maybe I'd be more aggressive on this Ollie's, if our own trading, you look at the Minerva Select portfolio, I think as of right now, we're probably up, I don't know, 3 or 4%. That's not a whole lot. It's not a whole lot of cushion there just yet. We're not getting, well, we're starting to get that traction. I'd like to see a breakout too in the performance, just like a stock. I look for a breakout in the equity curve. You know, we were up a couple percent, or we were down a couple percent, back and forth, back and forth. I want to break out of that equity curve and see us up 6, 7, 8%. And now say, okay, now things are moving in the right direction. We definitely improved here. We're getting that traction, and we have a little bit more profit now to cushion us a bit. Now, you know, we can push it a bit more.
Yeah, I think that comment on the equity curve is definitely a golden nugget as well.
Yeah, you'd be surprised, you know, if you're doing this right, and you're, you know, some, like, you take a look at, I'm 100% certain if I look at Mark Ritchie's equity curve, it's going to look like a stock. It's going to move up, it's going to trend up, it's going to consolidate, move sideways, have some shakeouts, and then recover and break out of bases. And just over a number of years, you're just going to keep seeing that. If you look at my equity curve, you're going to see where, you know, it breaks out of bases. It looks very much like a stock. And that's when, and those consolidations and those pullbacks should be relatively shallow. That's if you're doing it well. If you're not doing it well, well, then you'll have periods of markup, but there'll be giant volatility, and there'll be big givebacks. And then when you look long term, there won't be much progress made because of all those big declines that take a lot to come back. So that it's all about managing the downside. And when you look at your equity curve, that's really going to tell you whether you're managing the downside well, if when things aren't working, if you're flatlining or not.
Yep. Janine is asking a good question here. From doing some post-trade analysis, she can see one of her tendencies is to buy early, but since she's buying mostly stocks from the focus list, she's been rewarded for that. But now that she knows that she does this improperly, should she immediately sell when she notices that she's buying something early, or just wait for the stock to prove or disprove itself?
Look, there's times where that's going to work, and there's times where it's going to bite you. You know, you have to ask, why are you buying early? I don't know what buying early means. I don't really know what that means. It could be buying before the stock moves at all in anticipation. It could be buying from a pullback buy instead of waiting for it to go above a pivot. I don't know what that means, so I really can't comment on it. But you don't really want to be buying early. You want to be buying right at the right moment, you know, and that is as the stock starts to move. You know, even if you're buying, let's say, ahead of the breakout, I at least want to see the stock moving in my direction. I don't want to go in there on a stock that's dead and not moving at all and start loading up. I'd like to see the stock at least starting to move in my direction. They're taking the offers, bids are firming up, and maybe the stock marks itself up a bit. You know, that would be at the very least.
Yeah. One example she shared is QNST.
Yeah.
Bought it on September 17th.
17th. Yeah. So again, I mean, I wouldn't say that that's early unless you were buying it maybe before it moved above the previous day's high, and, you know, started to give some indication that it was a pullback buy or a breakout above a pivot or some type of, like I said, progression in the right direction. So it doesn't really look early. It just doesn't look, you know, completely perfectly set up. So that's another thing with grading. You know, if you grade, you can grade early, or you can grade, you know, bad buy. You can put your own annotations in there. This one, you know, buying into some supply, I would grade this as, you know, not the best buy. You know, not the setup not really being fully complete. Especially, you know, when you have this reversal here, then you try to come back here and you break out, and then you get another big reversal here. So now you're sort of cheating right into the spots where you can see it reversed here and then sold off here. It's clear, very clear, that you've got that supply right in that 1950-ish level. So you're buying right into it. And you know, you got rewarded a little bit, but it didn't take off from here. But now it tightens up here. That I would be more inclined to start looking at it. And maybe that's what you mean by early. So you might be jumping on the setups beforehand. Now, Ollie, I would, you know, I would classify this or categorize this as me going in, you know, early. Technically speaking, not the entry early, but going into a chart that is a bit early. It's a little compressed up this right side. This would be, you know, an example of me sort of stretching, you know, but it's a good stretch. You know, this is not a real bad stretch. It's still set up. It's just a matter of whether it's going to be a short stroke pivot or it's going to come out here and give me the, you know, the classic symmetry. So I'd say this is a little bit better of a stretch than your stretch. And yours might work out better, but just looking at from a risk standpoint, I think this is a little bit better risk reward.
Question Ron is asking if ARMN, I'm sorry, ARM is coming up on your watch or focus, soon to be focus.
No, yeah, again, see, you got a big decline here. Now, because of this pretty good sized decline, let's measure this first of all. So that's almost a 50% decline in just a few weeks. And now you're retracing. Look at that 50-day. Look at this 50-day here. That's a major. If you were to look at this in Monalert and see, I could see that you're probably not using Monalert by asking me this question. Because if you're looking in Monalert, this would certainly say major angle warning because you're above the price, but the 50-day is in a steep downtrend. When you have those two opposite directions, price going one way and a sharp downtrending 50-day within a base, that's that's a tough that's a tough win to go against. And with a 50% decline. So you got to, and that's why, again, like as we just said before, that's where you'll get those sometimes when you get that big decline and just hasn't had enough time to get that intermediate term trend to turn around. So, and it may work. I'm not saying this, stocks go up all the time that don't meet my criteria. But once again, it's all about having reference points. So this is definitely not with that sharp 50-day like that. And I don't even need to see the 50-day. Just by this decline, I would know that that's the case. It's just not going to make my cut.
Actually, it is showing a minor angle warning mark for the last 3 days, but
Yeah,
point
maybe
taken.
that's because it's not above it enough, but certainly the angle of the 50-day is super sharp. So, even if you were be highlighted that it's a minor angle warning, okay, it's not much above it, so it didn't go, against it. That's another element of the angle warning indicator. But the sharpness, the steepness of that 50-day, you can visually see. So that Monalert should at least had you look at it and say, hey, there's an angle warning there, and now you go in and take a look at it and assess it.
Yep, with the 96 RPR. Okay, well, with that, we are actually at our time for the day and do want to thank everybody's questions. We did get through a bunch of them today, although I know we didn't answer still all of them. So try to hold on to those questions for next week, or your opportunity with Thursday with Mark Ritchie and Brandon is another chance to have questions answered. The replay of this will be posted here momentarily. Thank you, Mark and Mark, for your time this morning.
Okay, thanks. We do our
Stay
best
tuned.
to answer your questions the best we can.
Stay tuned to the live stream for real-time updates and alerts throughout the week. We do have one earnings report for Costco this week. I believe it's Thursday after, so we'll have that posted. Wouldn't expect that to be significant for that purpose. With that said, we'll get back at it very soon with you next time. Thanks.